Hi, this is Curtis from Beyond Backtesting. Today we're going to talk about how do we pass these trading trials? Can it be done even? How do you do it? So let's talk about it. First, I haven't technically passed one of these unless you count the time I was fell on a technicality by that one firm I won't mention. Claims to be trying to find great traders. But still, I'm gonna lay out a plan. I'm gonna lay out your plan, how to get these things passed, and I even got a calculator here, a spreadsheet I built, custom spreadsheet that will be helpful for us to see how this works statistically. But first, this whole goal of how to pass trading trials, of passing the trading trial, is misplaced, because reality is passing is not the prize. Passing is not the goal. Because in order to get a withdrawal, you're going to have to be able to pass it twice. And in order to grow the account to something meaningful, say $5, $10, $15, $25,000, $100,000, you're going to have to be able to trade at a certain level of consistency. That's very at a very elite level. Now, and one thing that will help with growing that account will be something known as optimal bet sizing, or the Kelly or optimal F. Optimal F is one type of position sizing, but you're going to need to use some kind of scaling plan, scaling technique to scale up those contracts. And the trial I'm trying is the Apex Trading Trial, the 50K. I think that's one that's the best value. You got $2,500 trailing drawdown, $3,000 target, 10 trading days, no limit. It seems very reasonable, but you have to be able to trade consistently, and that's very difficult. It gives you the 10 contracts. You think about it, so it should be, it should be possible to scale that up to about $100,000. That gives you 10 at 10K per contract. So if you get to $100,000, you're going to have enough contracts to trade to be meaningful, even at $100,000. That's still pretty aggressive. One contract per 10K is still pretty aggressive. So that's a nice thing too. But the first step is how to pass. So the first thing about passing these is you're not going to be able to trade with description. This is my opinion, right? But this is why I'm approaching it. This is my plan. This is what I suggest we think about, right? You're not going to be able to trade with discretion, or high discretion. Rephrase this. You're going to need to define your setups, okay? So I'm not saying you can't trade with discretion, but you're going to have to define setups. You're going to need objective setups, right? You're going to need objective setups, okay? And the way, see my last video where I talk about this, but say you're a tape reader. I like to read the tape. You want to be doing that in the context of a setup of a programmed criteria, an algorithmic signal, right, that has edge. So you're not just reading the tape from any point in time, without any type of structure. The tape read. You get a signal. Okay, now you read the tape. How's the tape? Is it strong? Is it weak? Let's see if you can find your entry. Okay, now that we have an objective, now that we know there's more likely to be a certain bias or edge in the market. Now, if you want to know how to find your setups, look at that last video I made. You're going to have to go into and take a notepad, go over your trades, go to that notepad, and make notes. You're going to have to program these setups in, right? You're going to have to do have some programmer or use some kind of tool to program them in, or use indicators. They need to be objective. It needs to be very clear when that setup happens. I don't even think a set of rules is enough, and this is my opinion. If that's all you can do, have your set of rules. It's going to be better if you can see it on the charts, if you can program it, in my opinion. Okay. Now, this is not enough, right? You're going to have to you need to define them. You're going to need to program them in, or have it, or create indicators that show them, or and alert you to those conditions. Okay. And here's the big thing. You want to know how to pass these things. You're going to have to go to market replay. You're going to have to practice in market replay over and over, okay, until you're hitting these goals. Now, obviously, in market replay, there's not the stress of the live markets. Obviously, if you're a tape reader, the tape doesn't move as good, the same. That's a limitation. But the point is, you should be able to pass the market replay. So before you start resetting, go to the replay, hit the objectives in the market replay, and And obviously there's some curve fit because you're going to know, you're going to play the same day over and over again, and you're going to get some curve fit, right? And you're not going to, it's not going to be the same, but you're going to be working on the execution. You're going to be working on that. And it's very important to have the setups as well, because if you're just reading the market real time and you manage to hit a certain performance in your replay, it's going to be very difficult to carry that performance over into the live. And this is something I know because I've traded with many different ways and many different signals. The more systematic your strategy is, the easier it is to convert it to the live results. You know, some system traders say, "Oh, it's not easy." It's much easier. Trust me, it's much easier when you have a signal. You get the signal. The signal has an edge. It is. I mean, I know it's much easier. I'm not saying trading is easy, but when you have a signal of edge, you're going to see how much easier it is, right? So yeah, you're going to practice in the market replay over and over that edge. Okay, that and the market replay we're referring to is Ninja Trader 8. That's going to be your go-to. It has the best market replay for this purpose. Now, there are some other platforms that have replay. Tradovate has a nice replay. The problem is the platform's not as powerful, and Ninja Trader 8 is going to give you the power to program your setups in, right? Sierra Chart also has a replay. Sierra Chart, I don't use it. I know it can be very complex. Probably not going to be the most efficient use of your time. So probably Ninja Trader is that balance. Okay, that's the way I'm approaching it. Okay, but before you shouldn't really be in the resetting your trial unless you've hit the results you want in the market replay. Say the prior week, right? You're going to play the prior week, the prior 2 weeks. Hit the goals in the last 2 weeks. Do your replay, and once you're hitting your goals, okay, now you have a little bit of evidence that maybe you can hit this. We're going to talk about how you're going to hit these objectives too, right? You know, one thing that I've always felt, and this is kind of a tangent, but I'm going to bring it up now, is that one of the things I felt that when I traded really well, and one of the attributes of a very good trader is the ability to evaluate your internal self-confidence and use that to rate your trade working or not, okay? This is a real hallmark of a great trader. But the thing is this has to be placed into a structure of discipline and system, and we're going to have to define that system where this fits in, right? But if say you're more discretionary trader and use that, that's fine. But you're going to use it in the context of these signals you build and these setups, okay? You're going to use it within that context, okay? Okay. 5, beware of the macros. Okay, beware of the macros. Just in my live with money and in the tryouts I did, I've had really hard time hitting I've had a big problem with running up trade fees and stuff in the macros. Whereas the minis, I'm hitting 70 to 90% win ratios on the minis. In the minis, okay, I'm not going to come out and say right out don't trade the macros on the tryouts. I'm going to say you should prefer to trade the minis, okay, because your trade fees are going to be much less. It's going to be much easier to hit those targets you need, and you're going to have less problem with the trade fees. And the other thing is the macros. It's just too easy to get in there and think you're going to play around or something and run up trade fees or get into a trade. I've had that happen so many times. You get caught, you think there's no risk involved, or for such low risk, it's just and when the market moves as much as it does, you're caught off guard. You have a big loss because you averaged in. I've seen this so many times that on my minis, I'm winning 79% of the time because when you put a mini contract on, you got to be serious. It's not something to play around with, right? You're going to lose. You can lose $100, 75, make $150, $300 very quickly. And this goes to another thing that we're going to have to balance. Is you're going to have to balance risk, risk aggression and risk acceptance, and risk acceptance. So I know for myself, and probably a lot of you traders who are trying these tryouts, you probably want to take these tryouts because you want to be more risk aggressive than you would with your own money. Let's just be honest. That's why we want to do it, because we want to be able to hit bigger targets. But the reality is that needs to be balanced. You don't want to be too risk averse. You don't want to be too risk aggressive, and that's going to come down to your position sizing, right? And the way I look at it is, you've got essentially $2,000, okay, $2,500 drawdown, right? You divide that by 10, $200 to $300 per trade is fairly reasonable. And if you think about that, with a good win ratio, that's also going to put you within 10 to 20 trades of passing the trial. So if you got to think about this different than you would say a $100,000 account. Obviously, if you're position sizing for a true $100,000 account, you're risking 1%, 2% per trade. You're not going to pass these trials doing that. You're not going to be risking 1 to 2% per trade. You're going to be wanting to risk about 5 to 6% per trade, which is 2,000 times 0.07. It's 140. It's a little bit aggressive. 6%, it's 120. So yeah, it's a little more aggressive than what you'd want. 140. Let's see what 2,500 does. 175. I guess it depends on whether you count that drawdown. If you count this way, it's a little more than what you'd want. But that's why it's tough. You would want to be at about 7% risk, which is a little too. That's a little bit low, I think, 140. So we'll put it this way, okay? Risk per trade, $150 to $300 per trade, okay? That's going to allow you to pass in a reasonable number of trades, a reasonable number of days, okay? That trailing drawdown, right? You're going to close down up $500. Anytime you're up 500, you're going to close it down, okay? You're going to be using targets, okay? You're going to be using profit targets, okay? Okay, and you're going to create a plan and be disciplined, okay? This is one of my problems, is making every trade into a life or death thing. Not every trade needs to be life or death. Take your stop loss, move on. Okay, not every trade needs, no trade should be life or death, right? Take your trade, move on. Shut down when you're down. I know it's hard because you're so close. Once you lose, that's kind of mindset. Okay, I'm already down. And if you're, I've found that when you're down or when you're close to the profit objective, is when things start going crazy. And it's because when you're close to the profit objective, you're like, okay, I just need one trade to push it over. I got within three times within $200 of the profit objective, just nothing to reach that. And I still, I think psychology came into play. So in order to mitigate that, you're going to need a plan, right? And I'm going to say a basic plan is this, right? Your basic plan is risk 150 to max 300 per trade, okay? You're gonna shut down, stop trading. We'll say you're gonna stop trading if you're greater than say 300 to 500 on the day. The details are not as important as making the plan up, right? And you're gonna know based on what you hit. But if you're more conservative, okay, stop trading if you're up over $300 in the day, okay? Okay, stop trading if down more than 600. Anytime you're down 600, just shut it down. Okay. So this is kind of your plan, and obviously you're going to have to hit some good numbers to do this. But before you start, before you even start, once you got your pocket, before you even reset or reset the trial, okay, you need to go and pass in the prior 2 weeks. Prior 2 weeks, placing the same setups, same way you're going to size them, right? In the past 2 to 3 weeks, okay, we'll say 2 weeks, 2 to 3 weeks. You should be right at passing to do that, okay? Okay, 2 to 3 weeks, all right? So two weeks. So, okay, so if you're going to do the trials and have a reasonable chance of passing, this is probably how you're going to have to do it. It's a lot of work. Obviously, you got to get your setups, you got to practice them. If you pass, I would say don't even trade the current. Don't even go in there and trade unless you've passed on the replay the last 2 weeks, and keep practicing. Yeah, there's going to be some curve fit because you're going to know how things work out, but that's okay because some curve fit is okay. At least you're going to have a it's going to be better than nothing, in my opinion. So any week you're going to do the tryout, you should have passed the prior 2 weeks. Okay, most recent 2 weeks you need to pass. You want to go back further and pass in 3 weeks or whatever, that's fine too. But you know, that's how this is. So before you even do it, can you make sure you pass the prior 2 weeks? Okay, and then I'm going to show you my spreadsheet here. So let's look at some of the math of it, right? And what we've got here is your win rate, and I'll share this spreadsheet later. This max drawdown is not calculated yet. I don't know if it's important, but so this is a spreadsheet I built just to see how this looks when passing and failing these trials, to see, you know, how possible it is, right? You have your win rate, your average win, your average loss, your trades per day, and your expected per trade. And then you know, I randomly generate trades with either your max, with your stop loss or your target hit. And again, when you're doing this, don't be too risk averse, because if you're hitting those targets, if you have that edge, you ain't gonna take that many wins before you're really close to the target, you know. So if you're not hitting, let's look at this. And I've again been doing these trials, so I kind of know if you're really struggling with these trials, it's probably because, one, you're doing the macros instead of the minis. You're trading too frequently, okay, not taking enough risk, or you don't have an edge, okay. You didn't do the replays, okay. And it's a lot to do, right? So just accept this as a process. So there's a lot to do. So here's a spreadsheet I built, and what I want to do here is every time I do this, I get a new random result. Every time I hit F9 here, I get it. You know, recalculates with new random result. And I have a fail column here where basically I look at your this trailing drawdown. It's really your peak drawdown from your high, and this will tell us when we failed. Now, what I do with that is I put it at 2,000. Now, if you remember, it's 2,500 in the 50K Apex trading trial. The reason I put it at 2,000 is because when you have an open trade, I'm going to say you allow that trade to go up to $500. Okay, so we're going to say that could be lost, and so to speak, from as you're trading. But you should never be, anytime you're up more than 500, you close it, so you never entered. So in a trade, intra-trade, you're never up more than 500. So we can count your close to close drawdown at 2,000. That's why I'm looking at it. It may not be fully accurate, but this is what I've got so far. And if you've ever drawn down from your peak equity 2,000 or more, you're failed, right? So here we see with a 70% win ratio, your average win 300, average loss 300, trades per day. This just shows you what day you pass on. In this example, you had all winners, so 70% win ratio. You had one loss to begin with, and you know, your trailing drawdown was from your max was at most $300. You passed on the 5th day with 16 trades, right? We'll hit this again so we see how this looks. Okay, hit F9 again. So here you passed after 32 trades, right? 32 trades. Your max drawdown from your peak was 600. We'll hit it again. Okay, so we can see here. Oops. You can see we're passing a lot of times within 30 trades, right? Not every time. So here's an example where we passed at trade 55, right? Our trailing drawdown got as high as $1,800, okay? Or our peak, you know, from our peak equity curve, right? Now this is very good. Now, again, you're going to have to hit some really good win ratios to do this, right? You're going to have to be very on point with your scalps, have a very good confidence, be able to evaluate that internal confidence, and be very selective, right? I'm thinking you're taking, I didn't say this here, but right, when you probably want to be taking on the number of trades, 1 to 4 trades per day, okay? And unless you're doing something with the macros. But again, with the problem with the macros is you run the risk of just running up trade fees. So you want to be at 1 to 4 trades per day. Why 1 to 4 trades per day? If you're risking $150 to $300 per trade, you're going to be hitting your $300 profit target in 1 to 2 trades, right? And if you're hitting 70% win ratio, and you know I do that when I'm highly confident. That's why I'm hitting 79% win ratio. If you can just take those trades and not get mixed up, right? Go to the sim, have your sim up so you can get on the sim, right? And I'm going to say also, do this, you know, do 2 accounts at the same time, right? Do 2 accounts so you're not as tempted, right? it's a little more expensive, but I say do 2 when you do it. But again, before you even start, before you even sign up, you need to pass in the most recent 2 weeks on the market replay. Okay. So, so this is let's change this. All right, this is not too interesting. This is so imagine if you get 70% and your loss was twice as big. Okay, now your expectancy is only $30 per trade. Let's see when you failed. Okay, you failed within on trade 21 within 7 days. Okay, and you'd only your trade P&L was never got up above $600. No, your net P&L was negative, right? Let's see it again a couple more times, see how this looks. Okay, you passed. Okay, here you go, 70% win ratio. You managed to pass it within 6 days, right? Here you passed. Here you failed at day 14. You were break even. Here you failed within about 4 trades. You got unlucky. Okay, here you failed, pass. Okay, so we see that if you're risking twice as much, even a 70% win ratio may not be too good. Let's go over this. Let's just see how this looks. Okay, let's see. We'll hit F9. We'll see. Okay, so run 1, you failed. You failed within 4 trades. We'll hit it again. You passed. Hit it again. You failed. You passed. You failed. You passed. You failed. You failed. It's on my screen down at trade. On day 40, you failed. Okay. You passed. You failed. Okay. So out of 10 runs, you failed. You passed 1, 2, 3, 4 times. That's 40%. If you did this 10 times, you would expect to pass 4 times. So even though, so you got about 50-50 chance. It's about 50-50 chance of passing on any one go. Let's look at what happens if we have like a 55% win ratio. Sometimes when I'm confident, my win ratio drops to 55% win ratio. Let's just imagine you're about $300 on your wins and $300 on your losses. Okay, your expectancy is $30. Let's see how this looks. Okay. Run 1 was, I'll hit this again. Okay, starting over. So we have failed. First time you failed, you passed. You passed. Okay, on run number 3, 4, within you're still trading after 31 days. Well, 31 days, you're still trading, and you're at $2,400. So still trading. Okay. Because I didn't go I only went to 30 trades on here on my spreadsheet. Okay, you failed. You passed. You failed. You failed. You passed. You failed. Okay, so even with a 55% win ratio, if I didn't make a mistake here on this spreadsheet, which is very possible, right? I'm going to review it. I'm going to make it available, but I'm going to review it. Think about it more before I make it available. Then even with just a 55% win ratio, 1-to-1 risk reward, you're still, you're still passing about half the time. Okay, so out of 10 runs, you pass 1, 2, 3, 4 times, and this other one was close to passing. It was $2,400. So that's 50-50, right? So why we have so much trouble then, right? Well, apparently we're not having that positive expectancy in our trading. That's the thing is we're seeing either that or psychology is you're getting too big, you're betting too big. So if you have an edge, it should be about 50-50 on passing one of these, right? And again, what's really relevant is it's where you go with it. So with this type of an edge, on day 31, you've got to in this example, day 30, you got to $3,000. So that's not terrible. Of course, there's a wide variance. In this case, you failed. So what you probably want to get to is something more like this 70% win ratio with the 1-to-1. I know it's gonna be hard, but let's just say we get to 65%, right? At 65%, let's see where we're at on day 31, right? On day 31, we're $8,400. So in this case, we passed. Okay, we passed on day 11. Okay, so we're right on target there with our passing. And within 20 days of trading, we're at $8,400. So that's really nice. Okay, here we passed. So here's an interesting example. Here you passed on day 13, and if you kept trading, would you be at your $3,600? Okay, so between day 13 and day 31, you're only made $600. You know, that's trading, right? You had a real good run to begin with, and you know, the next 20 days you didn't really make very much. Of the 65%, that's a pretty good expectancy here. Here's another example, right? And this shows the randomness of trading, right? Here's another example. Same odds, same your expectancy is the same, everything's the same. This trades per day. This just shows what day you pass on. But in this case, you passed on day 12. And if you continue to trade, you kept building your account up. Assuming here you reset, and of course they take out the 3,000. But by day 31, you're at $7,800. You got $8,000, and so this would be essentially on a run like this. What we're really looking at is this means you get to pass the second run too, right? This means you pass the second run as well because you had a good run here, so you're able to withdraw. And that's that's the goal. It's not just to let's see what happens if we extend this out, right? And again, you'll use position sizing to build your account up, right? And scale your contracts up. But here we can see with this type of an edge within let's see where we're at. And it changes every time because it recalculates. Okay, within 90 trading days, you're at $25,000 account. That's the goal, right? That's the goal. So this is the real goal. Okay, you get 21,000, 25,000. Oops. 33,000, 22,000, 18,000. There's some wide variability, right? There's even with these static odds, right? So we can see if we have the edge, we should be passing. Why we're not passing? Either we don't have the edge, we're loading up on certain trades, having big drawdowns. Trade fees are becoming a part of the problem, right? Psychology when you're when you're down, not trading the same. So this is my plan for passing. Okay, build your setups, practice your setups in the replay, practice before you go in and trade on the tryout, before you reset it, before you start it. Make sure you pass in the prior 2 weeks in the market replay. Okay, that's going to give you with your setups, right? Make sure you was able to pass in the prior 2 weeks. And if you can't, then we got to you may need to evaluate your setups and your plan to see, okay, if it's how you would do that, and create your plan, right? Create your scaling plan. Create your scaling plan and your max contracts. Okay, I filled several of these trying to trade between contracts, and I had no business doing that because my trades needed to, statistically I could trade 2 or 3 contracts reliably, right? And I wanted to see, can I trade 2 contracts? I was not able to do that. Now maybe I could scale up to that, but with these targets, you don't need to be over 2 or 3 contracts on your trade. So I would suggest 2 minis, 2 to 3 contracts on the minis max. That's all you're going to need, unless you have some very super precise scalps. Let me know. Try this and how it works. If it helps, I'll try to make the spreadsheet available soon. Hope it helps. Thanks.